Hi everyone, how's it going? I gotta make sure that my face is visible. I'm sitting the right way at the camera. All right, here we are. Welcome. It's going to be an interesting week. Welcome to Market Kickoff. My name is Anne-Marie Band. I'm excited to be with you. Having a hot beverage. It's good to see everybody here. I know you're all hard chargers, not watching football, or maybe you're watching football and watching Market Kickoff. That's awesome, either way. So let me tell you what happened this week. Thank you for the heads up, Bruno. I appreciate that so much. Let's talk about what happened this week. We had some really sharp flows into a downward formation, very sharp downward action, and then a reflexive motion that we can see here in the ES chart. I've got it on the 4-hour right now for us to take a look at it. This is a bottoming formation. Two things have happened. Institutional traders, they've put up their books for the month. They closed in the big volume space. Their net flows are slightly bullish into the end of the year. A couple of things have happened in the week going into that. A lot of rotation. Now, technically speaking, most funds do not deal in triple X funds, and the outflows and inflows, or the flows in the triple X semiconductor last Friday, this past Friday that we experienced, was almost 1 billion on both the bear side and the bull side. The bear side had 700 million shares moved, and the bull side had 300 million. So 1 billion shares moving in the semiconductors is not a trivial observation. And so my suspicion is that we are rotating into other areas within tech and outside of tech. Okay, so for next week, we've got the holiday. Because institutional traders have closed up their books for November, most of the trading is going to be retail driven. That means we're going to have thinner volume, and that intraday volatility that we should be becoming accustomed to is going to get even more significant. It's a really big deal. The stats for the S&P 500, broad markets on Friday, 74% of the instruments were advancing. As far as how everybody sits above the 200 simple moving average, why am I choosing the 200? Because institutions say, this is a common term that they have, they say nothing good happens underneath the 200 simple moving average. And it turns out that it's about half and half right now in the SPX. Hence the institutional flow positioned slightly bullish, not aggressively bullish. They've pulled their put wall down a little bit. They've pulled their call wall down a little bit. Pretty important for us to notice. What else? Because there's so much rotation in the NQ, and we're seeing a rotation out of some very heavy hitters, except for maybe Google, that's really bucking the trend right now. I'm not sure why, but I'll dig into that at some time and tell us. We could see the YMES move differently to the NQ. The Russell, folks just jammed themselves into the Russell on Friday, and those are just people trying to catch falling knives, frankly. And I'm not sure how well that's going to go. Okay, so let's jump in to these call walls. We start in about 9 minutes, and I just want to race through the numbers in case we are looking at taking a trade today. How do we end the day? I'm going to move this anchored VWAP. Whoops. Where is it? Here. I'm going to move it here to the last major high, and I'm going to move this anchored VWAP to the last low. Okay? And so, wait a second. Let me make sure. Yeah, that works. So what we're seeing is price action that's trying to form a bottom. The top VWAP is still negative. The bottom VWAP is positive. Momentum drifting positive. We are making higher lows. My suspicion is that if we pull back, we should have a buy the dip formation into Monday. Now, here's something else that's super interesting. When retail traders are running the show, we have a tendency to have upward pricing. And so let's take a look at where all that inventory moved. We can see that it's a pretty wide box. That box is going to give us a low at 65.52 and a high at 66.14. The halfway point is where I would love to see price action come back in. That 65.82, that's going to be a really pretty buy zone in my mind. Okay? So we'll get them. We'll hang on. Cool jets, we're still in the ES, not gone to the NQ yet. So here's what I've done. I've put up the monthly put wall and the 0 DTE put wall so you could see how things go as it stands, right? And so we'll see that the put wall is way up here. So the traders are going to try and get to this 6,700 event. For the monthly event, it's moved up. This was down at 6,500 on last week's edge. Now it's moved up to 6,700. The 0 DTE call wall, 6670. What do they want to do? Well, the 0 DTE guys are going to want to keep it down underneath that area. But the big monthly call wall that was 7,000 is now 6850. So they're squeezing price action into a pretty big pocket in my mind. What's the thought? We're going to move from this area of accumulation back up to this area of accumulation. I'm going to remove that. I'm going to draw another box so that you can see where these traders, where these traders are setting up for their motion. And you could see at the end of the day, they actually moved into halfway through the box and then down into the space. Could you say, hey, Marie, I think your box should really come all the way down to that wick? I'm not disagreeing with that at all. What we do have to get up over is the point of control, which is 6660 or thereabouts, but my suspicion is dips are buy zones. They are buy zones. Could they get sticky? Could we have a run down and then a run up? Absolutely. But as it sits, that's what we're going to look at. Now, let's take a look at the NQ. Same sort of action, right? We had inventory accumulation from the box. Really, it took a lot of these. So we're going to say from 24,030, if it comes back there, I think it'll be a screaming buy. It just needs to hold 24,000. So you could get a couple of paper cuts trying to pick a bottom there, but my thought is that traders won't let it come down to that space. The monthly put wall, this is very interesting. The monthly put wall is 24,200. The 0 DT put wall is well below. So what does that mean? That means intraday volatility is expected, but at the end of the day, they expect the traders to rise above the zone. The call wall is where we jammed right into at the end of the day, 24,475 or so. But look at this pocket of congestion that sits right there through from 24,475 all the way up to the current call wall, now sitting at 25,000. That one moved in, it was 26,000. The 0 DTE call wall, 24,500, and that's what we're going to do. What do we see? How do we know that the traders are going to try and buy this legitimately? Well, we did make higher lows before the end of the day, and so dips are going to be buys. We also have an updraft in momentum, and so that's going to be super important. Let's take a look at Bitcoin. Oops, wrong. My Shrek fingers, as it were. All right, let's take a look at micro Bitcoin. So these guys have been way upside down on their walls, but they pulled them together fairly well. The 0 DTE put wall and the monthly put wall are the same at 76,000. The monthly call wall is at 92,000, excuse me. The 0 DTE call wall is still up at 110. So they are expecting wild volatility. What am I looking at? Well, we know that our chief in our own master and commander here at Topstep bought some Bitcoin for the long haul this past week. It is a fair price. I wouldn't be surprised that if we bounced and then faded and then bounced again. So the bottoming event for Bitcoin is really going to drive some of the direction of price action this week because it is a measure of liquidity, right? It's liquidity flow, and this is sharply negative. There are going to be people who've been buying the dip and buying the dip and buying the dip and buying the dip and getting smashed. So they are going to get out at these bounces. Now, how do you know that? How do you know that, Emery? Well, here's the thing. The one thing that we can see is on our hourly chart, every time we try to move off of our lows, what happens is, here comes the open. Well, we'll see. Nice gap up right into the resistance zone. So as a trader looking at this patch, I would say two things. If you wanted to go short here in Bitcoin, which would not be unreasonable to go short here, if you wanted to go short, you better not you better not breach 89,000, or you're going to be sitting on the wrong side of this trade. So that's my thought right there. I'd like to see it bounce and fail because I do believe it's going to double bottom. All right, but this was a very nice V reversal, absolutely planned in terms of watching market flow and realizing traders would try to do that. But look at what's happened. Every time they have a movement up, whether steep or shallow, here's a little bit of a shallow move, what they end up doing is crashing into the floor. Now, the one thing that's pretty interesting right now is if we take the VWAP, if we take the VWAP and we move it up there, we can see that we've gapped up above it. And then we'll put a VWAP at the low here. This chart is going to likely come back and test this region. right? If I were sitting down, staring down the charts, I would be shorting this. And it's because I'm still bearish on Bitcoin. Now, when it stops and where it stops, I'm going to be looking for those price flows, and that's going to be up at that 89,000. So what I'm optimally looking for is a push into that 89,000 and a failure, and then I'm going to go short. All right. Okay. What's the best method for taking a payout? You know, I don't quite know what you mean. Besides, you mean size? Oh, look at all these lovely people here. Hi, everybody. I would take optimally the bigger cushion you have in your account, the less psychological noise you'll have to deal with mentally. All right, and so ACH is always best for me, but that's up to you. That's up to you. Thank you so much. All right, let's take a look. Let's go to the ES. Somebody said they just grabbed 1,200. Hey, that's awesome. That's awesome. Look at where it gapped up, folks. Right in the middle of this patch. Right in the middle of it. So we've got a beautiful gap. It's above the space. Look at what happened the last time we were above these gaps. My thought would be, I like the sell here, but I would say that I really would like to see it move quickly downward, or it's sitting in the wrong direction, right? So we'll make our stop above the call wall, and we'll make our target, because they're very likely to move around. Let's make our target all these crazy VWAP lines. Right? You give it a little time. Okay. So there we have that. Let's go to the NQ. Same business. That's why I love drawing these boxes. Okay, so what are we doing here? Obviously, we're not hitting the top. We're at a very important line that everybody is going to fight around. My suspicion is that, let's try, we'll put a limit there. See, this is very close to the call wall. The setup is very different than the ES setup. And why is this different to the ES setup? Because we're sitting on top of the call wall in the NQ, and they're going to try and fight to hold above the wall if they're thinking about a break, right? Let's anchor some VWAPs. What do I like to do? I like to anchor a VWAP off the low, the recent low, and I like to anchor the VWAP off relative highs and then recent highs. Right? And all of this looks pretty bullish. So I'm gonna try a topping formation and leave my stop fairly tight and my target down at the bottom of the box. Right? I'll leave those in the overnight. We'll see how they do. Okay, so we know what's going on with Bitcoin. I likely will be trading Bitcoin in my live account, but I do love this short so very, very much. I do. let's take it, and then let's put the buy stops at the top of the box, and the buy to cover down here below in 2 tranches. Nope, 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 nope. Yeah, we'll put them at the same price. All right. Oh, nice. Nice. Not D. Oh my gosh, how awesome. My friends. All right, let's take a look at oil. So oil is something super interesting. We had a jobs number that was, I don't know if the jobs number moved it at all, but here's what's going on right now. We have the put wall for the 0 DTEs at 57.50. We have the call wall for the monthly, we have the monthly put wall down at 55. It's still very far away. The 0 DTE put wall is at 60. And the monthly is at 65. This tells me that traders are expecting quite a bit of volatility. Now, what might that be related to? It could be geopolitical. It could be general market shenanigans. But here's what I'm seeing. The entire day it sat in a pocket from 57.50 to 58.50. The midline is where it's sitting right now. So my suspicion is that it moves to the bottom of the box. And if it moves to the bottom of the box, I'm willing to position a limit order with a tight stop and a target. Whoa. Let's put the target here, just in case it hits it first, right? We'll have all kinds of crazy things going on if that happens, but I expect buy at the bottom, sell at the top, okay? So, yeah. Yep, market just chopping around, but literally, if you want to trade this one, it's just, I mean, it's a mosh pit, absolute mosh pit. All right, let's take a look at gold. All right, if we take a look at gold, we have something interesting. The 0 DTE call wall and the 0 DTE put wall are the same as the monthly call walls and put walls. And so what do they expect? Big chop in between these levels. I suspect that gold is now stuck in a range that could last for months. Now, statistically speaking, I just saw a stat on this, and it said that in the month of October, price actions generally drift down in gold and then move up into December. Now, I don't know if that's going to be true at this time. It looks to me like it's a big sideways mess. So, notice where the volume point of control is. It's the same number that Hoag's been talking about, and I've been talking about for, I don't know, a couple of weeks. 40.70. We are still looking at broad noise. Now, inside of these big pockets, you can see lots of other smaller pockets of accumulation and distribution. But again, the only goal we should have engaging in the market is, if I make this trade, do I have an edge, and can I legitimately see where price action is running? Like I said, I like to anchor some VWAPs. Look at where that's sitting, right? That's near-term low and then near-term high. Look at that. Right in the middle. What does this tell us? So if you're a math nerd like me, you'll know that, and I know probably two of us are in this whole stream, but if you look at something that's an average and it's flat, what it's telling you is there's a lot of price action above it and there's a lot of price action below it. That should tell you, wait for the deep dips to get your edge versus, hey, I think gold's going up. Listen, I think gold's going up too, but I don't think it's going up and staying up, and I don't think it's going up so fast and so easy that I can take a long right here at 40.89 and stand a fade that's $50 wide. I can't do it, right? I can't. I might be able to do it with a micro, but I certainly don't want to do that. So what's the storyboard? The storyboard is look for the top, take the trade. Now, you could say, Anne-Marie, that box is not very good. And I might agree with you. Why? Because it's too big and too broad. But you can look at something like this and say, all right, if it behaves as it has in the past, it's going to sit in this box for a relative period of time. That low, 40.57, the high, 40.84. Could it go above it? Yes. Could it go below it? Yes. But that's going to be your stop. If you decide you're going to go up here and the trend is moving this way, listen, folks, for the intraday trader, if you don't have momentum and trend on your side, it's going to be tough, right? Because really all you're doing is trying to buy in one place and sell in another, or sell in one place and buy in another. That's really all you're trying to do. So from that perspective, it's very important that you understand what the price action is doing. And if it holds this level, you're fine, but literally you got to wait until it does its thing. So you have to wait until it gets above and then breaks. Could you also use other numbers? Yeah, absolutely. You could use the high from Friday. Now these Topstep levels have not been they've not been set yet because that is not yesterday's high. Friday's high is this number, 4,100. And so you could look at that and go, hey, 4,100, I'm in. I'm doing it, right? Let me change this. Right? You could easily do that and say, okay, I'm going to try and scalp the short, knowing that Tuesday's high was 9 points above it. Okay? Now, is it certainly moving up? Yes. It's moving up very, very nicely. Is momentum high? Yes. Could you take the long here if you wanted? Yes. But as always, you could do anything there. You could take a long, you can take a short, you can do whatever you want. The question that is the more important question to answer is, why do you want to do that? And what's the risk of taking that trade? We just finished just a magnificent VIP season. So many of us coaches had such a wonderful time with these traders, many of them moving into XFAs and taking a lot of new knowledge and structure with them. And at the end of the day, what we want you to be able to do is pull money out of these accounts so that you can open and fund another account, right? Use your own money to trade and build, and you keep all the profits for yourself, right? But that also comes with another side of that, and you have to really manage yourself very quickly. When you're managing yourself, you don't have a risk manager that calls you up and says, hey, maybe you ought to hang on to some profit. Maybe you ought to close this trade here. Maybe you ought to whatever. So we lose a lot of things when we leave the live trading environment of TopstepX, but our goal is to make you profitable traders. So you could take your money out and have greater control over it. And so, maybe this Wednesday when I'm on with Hoop and I think Hogue on Wednesday, we'll talk about, having an XFA, or having a live account. What are the things that we don't think about when we are in the Topstep environment, as we are seeing so many traders really catch and employ and do so much that the Topstep VIP program has wanted them to do. It's just been absolutely fabulous. Where's my buy zone in the ES? Okay, so that's a pretty good question. Where's my buy zone in the ES? Well, my buy zone is the gap fill. Just above the gap fill, right? So I'm suspecting that it meanders all the way down here and moves into the zone near 66.36. Here's the thing. What I have to pay attention to is what's happening with this trend, right? So the reason that I have my buy set a bit higher than this edge here is because I see buyers coming in at the bottom. Now, could this rotate all the way over and come in and hit this VWAP down here? Absolutely. Absolutely it could. But that's not what I am thinking about what's happening here. I'm thinking there's going to be a fade. Traders are going to get themselves, I don't know if they'll get themselves off sides. I don't know if they'll fill the gap. I don't know what's going to happen, right? But we're going to have Asia movement. They don't have a holiday week coming up, so they've got some stuff going on, but their flow is still light. Do you know what I'm saying? So for me, I think it's going to be a sideways mosh pit. Funding your own account is just foolishness fueled by ego. Wow, that's a very assertive space. Here's the thing. You're entitled to your opinion. I like to keep all my winnings, all of them. I don't care about sharing them with anyone. And so, although this might be great for someone without funds, if you have funds, you can do all kinds of things. And what prop firms don't do because of the massive constraints of leverage is allow us to keep trades overnight and trade with options, because the leverage could put a prop firm in a lot of trouble if people take a lot of stupid trades. So, of course, listen, everyone's entitled to their own opinion. And what gives me a big chuckle very often is I'm going to use a 50-cent word, the vociferousness of our opinions that come across the wire. And listen, as one of my older sons says, hey, free conch. we tangle. I have a son that is very opinionated, and his opinions are nothing like mine, so we have a good banter. That being said, for most of us, the prop firm is a magnificent opportunity. It's a magnificent opportunity to begin and grow, because here's the thing, a lot of us open up live accounts and we have no idea of what to do with that money. No idea at all. All right, let's move along. I'll step off the old soapbox there. I have a strange feeling that the cues have left me behind, but I'm not willing to jump into this trade, and it truly is because there is a battleground at this zone. So let's zoom in and see if we can see how that battleground is framing out. Now, notice why I say this is a battleground. The first 5-minute candlestick, savage upside wick, right, comes right into the heavy congestion here. Remember, you can have regions of accumulation, inventory accumulation, inside other regions of inventory accumulation. And so that's just what happened. This one came up a little bit over the top of that halfway point, but not by much. And it rotated down. So the open of this 5-minute candlestick tells us, hey, that's the floor for now. If we lose the floor, we might fill the gap, but not without a bounce. And I'm glad I moved that into this 5-minute, because I'm seeing a lot of price action that's sitting here. So I do think a bounce and then a fade. It could go both ways during the night. It's just truly a mess. Oh, Dawn, I can show you that. Super easy. Dawn says, hey, how do you do an anchored VWAP? Watch. You can go on any time frame in any chart. You go over here to, nope, wrong. You go over here to the 1, 2, 3, 4, 5th box, and you go all the way down here, and you select anchored VWAP as your favorites. And when you get a favorites tab, it's going to look like this. It's going to give you all your favorite tools. All your favorite tools. So you just click on where you want to anchor your VWAP. You click the anchored VWAP itself, and then you go to where you want to anchor it. Now, a lot of people, listen, you can anchor that anywhere you want. If somebody says to you, oh no, don't anchor it there, do whatever you want, right? The question is, it's got to make some kind of sense. If you just do it willy-nilly, not going to be too clever, okay? So how about the nearest low? Okay, and so this gives us a region that if my buy zone hits here, I probably, also an area, this one is so messy, right? Inventory here, inventory box here, so let's say it goes there, right? Then I would have a stop sell right there, just in case. Just in case. So which one of ever these it hits first, it's going to go. But that's all you do. And the way that you eliminate that anchored VWAP is you just highlight it, you'll see the little bubbles show up, and you hit delete. Simple as that. Super simple. All right. Okay, what kinds of, how do you find the gamma levels? Okay, so here's the storyboard about gamma levels. You can go hunt them down yourself on an option chain, okay? For me, I use the delightful Mentor Q, wonderful group, all kinds of information. They give you the call wall, the put wall, and all the gamma lines in between. It's absolutely fantastic for figuring out how that goes. If you want to do it yourself, here's what you would do. You would open up your option chain and you would look at tomorrow's expiration and you would see where the most open interest is sitting in that list. It might be 5,000 if you're looking at something like YM. It could be 35,000 if you're looking at something like ES. If you're looking at something like ZB, I don't even know what that might be. It might be huge, frankly. But that's how... Oh, thanks, Jay Reardon, for picking up my book. But that's how you find these walls. If you don't want to go hunting through the walls, you can get a service, and that service I would recommend as an ancillary event to your Topstep platform, and that is Mentor Q. You guys. Anyone expecting the NQ to sell down to 24.4? I mean, it could happen. That's the gap fill, right? Right around the gap fill event. So it could happen. See, here's a learning event. As traders, we often ask questions. Listen, I'm not trying to be fierce. One of my members in the VIP said, "Oh my gosh, I better wear my padded pants to class tonight." But my thought is this: I'm going to be straight up. If you like it, great. If you don't, there are a lot of other people to listen to on TopstepTV. A lot of really great people that think a lot of different things. Find somebody that resonates with you. I'm just going to tell you how I see it. And a lot of times we have these questions that if we knew the answer, we still wouldn't know how to place a trade off the answer. And so I'm not picking on this person, but the Dome Gorillionaire is going to be thin all week. Absolutely all week. So here's the storyboard. If someone says, "Hey, do you think that the NQ is going to sell down to 24,400? Irrespective." I used to have a friend that said the word irregardless. It would make me crazy. If any of you have seen the Glass Onion Knives Out, it's hilarious for all those absolutely stupid words Ed Norton uses that he thinks are real words, or he uses words in the wrong place because he's actually just a moron. But I digress. Irrespective of whether you know the answer to that or not, how does knowing the answer help you to trade better? I'm going to wager that it doesn't. Now you might go, "You're ridiculous, Anne-Marie. I could just short that right now and just wait." Okay. Here's the follow-up. How much risk are you putting yourself to? Where might it go before it goes to 24,400? How does it get to 24,400? When does it get to 24,400? All of those things create a very nebulous environment to the answer to the question of, yeah, it's going to 24,400. And here's the thing. The most we have as good traders is an educated guess based on what we perceive the technical environment to look like. You know what I mean? So, when you frame out, how am I going to set my strategy up, or how am I going to trade, we have to think about, am I asking the question that allows me to position properly, taking a trade into 24,400 if it even gets there? How might I do that? Right? For me, I am a simpleton. I know some of these guys laugh when I say that, but I really do mean it. I am a deep thinker, but I'm not a fast thinker. And so because the markets really move fast, I have to widen my framework, right? And here I go, widening it out to that 30-minute formation. And I have to just sit tight and go, okay, if I want to take this trade long, because I see us making higher lows, where could I position where other people have positioned and ride their coattails? Because see, we can't move the market around. We have to have a concerted, organized, coordinated effort of buyers that help us move into a trade and stay in there. We can't move it on our own, right? We simply can't. So that's that. Somebody says gold is about to sell. That's another, okay. All right, so gold is about to sell. What does that mean? Gold's been selling. So if you say, hey, gold's about to sell, listen, I'm not picking on anybody. What I want to influence you about, because everybody has an agenda, okay? I'm just overt about my agenda. I want you to think about the questions you are asking about the market. What are those questions? So the question is, okay, here's the box that we drew. Here's that midline at 40.70, but if I'm looking at a 5-minute chart, I've got buyers. So if the statement is gold's about to sell, well, where? Now, here's the thing. What I want you to think about is, if gold were about to sell, what would I see? See, that's the question that's going to make you a better trader. That's the question that's going to make you go, oh, I see. If gold's about to sell, what should I see? Well, here we go. How can we do it? Let's use an anchored VWAP. Well, gold's been selling since it opened up, right? It has been. It bounced for 10 minutes and now it's selling. So if you're saying, hey, gold's about to sell, well, where's it going to? Well, I think it's going to yesterday's low. Fine. Let's say that. It's going to yesterday's low or Friday's low. Okay? The question then is, if I take this sell, what's my risk? And how do I know that I'm either right or wrong? I'm really not taking any names. Right? Listen, gold was selling. It's down 4 points from when you said, hey, gold's about to sell. Right? The question is, what does that mean to you? So here's why I'm saying that. If you clutter your mind with questions that don't make you trade better, I'm thinking you're doing yourself a little disservice. So before you ask any question, say to yourself, how does knowing that make me take a better trade? And then keep digging down, because you might say something frivolous like, well, what are you talking about? I mean, if gold's going to sell, I'm just going to sell it. And then it's going to sell. If I knew it was going to sell, yeah? Well, what if it bounces before it sells? What if it bounces 70 points before it sells? Answer those questions and build a better mousetrap for yourself, right? That's critical as a trader. I stepped away from a trade for 2 minutes and accidentally passed another combine. Look, living good. That's great. All right, let's see. Was in a short from 40.71. That is a beautiful number to be short from because it's right there on the edge. It's got a little bit of risk associated with it. And now coming into the midst of the VWAP, the volume point of control, right here in the center, and the low of the anchored VWAP off that edge. Now, what's the anchored VWAP off that edge actually mean? Nothing. It's just a place to look at that goes, well, I can draw a trend line moving up, and the anchored VWAP is also moving up, so I need to break that anchored VWAP, retest it, have it fail for another continuation down in my chart. Thanks, Jay. I appreciate that. All right. What are you basing that on? To whom are you speaking, MKRI 1000? We wait for confirmation, lower low, and then take it from the point of control to the volume low. Can you come on an hour earlier? You know, I would like to. And potentially that might be a thing that we do. Right now, it's not so, but I wouldn't mind. Truly, I wouldn't. I wouldn't mind at all. Waiting is key, and I don't like to wait. You know, you and me both. I have never met a patient trader. Ever. How many gold contracts? Jacqueline Herzog. That's kind of a famous last name. I would say the question is better if you are buying a gold contract, realize how quickly you can go upside down in a gold contract. It's $10 a tick. So it's $100 a point. So you can really get your face ripped off doing that. So just, I wouldn't ask that question. Somebody says, we've been trading between these huge liquidity pools for over a week, and now we're still in bearish trend. Don't forget that until NQ price sweeps the zones. Yeah, that's a fair assessment. That's a fair assessment. That's a fair assessment. Anyone know discount codes? We don't have any discount codes right now. Yeah. Well, I tell you what, if you're living right and you have the perfect price, sure, you can pass that with 5 gold contracts. I would not do that. Are gold and the indices opposite? No. Now, what we used to have are these crazy relationships. For when the indices were up, gold was down. When interest rates were down, gold was up. When the dollar was up, interest rates were up. Now, those correlations are, I think the last time I saw correlations, they were like 0.17 for the latest correlations overall. So no, they do not trend in opposite direction. They do not trade in opposite direction. Can we take the immediate target as 40.75? Immediate target of what? A long? Very nice, mysterious being, 415. Good for you. We love it when we see people come over to a space that actually works better for them. Oh my goodness, look at this thing just meandering. Oh, languishing. Well, whatever. Happy Thanksgiving to you as well. BT, NQES are correlated. Yes, but again, how that correlation changes from day to day, especially when markets are in rotation like they are right now, they shift. So you want to be careful playing those gaps, right? Thursday candle bottom doesn't have a wick. In what contract? ES? It kind of does. It's 1.5 points. All right. What percent discretionary versus mechanical are you? If you're not running an algo, you are a discretionary trader. Now, you can use a strategy, and that strategy will give you one thing or another. But if you are executing live with your mouse and you're not running an algorithm, then you are a discretionary trader. How can we get this volume indicator on the side? This is lovely. Let me show it to you. This is called the Volume Profile Visible Range, VPVR indicator. And you can find it right here. Now, I have it right here as my favorites. And what I've done is customize the colors. And I use a number of rows because I want to see what's going on. And I use delta instead of up down. And I have my value area, the pocket that is brighter colored than the darker colored one, at 70%. So that's how you do that. Anyone else love slow markets? Of course. Who doesn't love slow markets? Your colors are the exact reversal of mine, and that's okay. Listen, here's the last thing I'm going to leave you with, coming into the end of the day. Thank you, coaches, for popping in, saying hi. It means so much to me. And for you, Bruno, for taking things and taking care of us. What I would love to see is every trader become master and commander of their ship, right? Ask the questions why in terms of risk and reward. Find out whether you have an edge someplace, right? Some folks might say, you know, this 30-minute bounce here off of this momentum event, I can buy that, right? You would have positioned beforehand, though, waiting for that price action to come. Now, it's got to build itself some traction, all right? So, be careful. What do you think about this week? I did actually mention that when I first began. We're going to have light volume. It's going to be volatile, but retail traders are going to be doing the majority of the trading. And what that's going to mean is that prices will tend to move up. Thank you so much. I love all the love that I get from you guys. It makes me feel warm and cozy, and I mean it. And of course, you guys know that I'm a pretty big mush pie, so you definitely know I mean it. But watch your risk. Slow and steady. Remember, we learned this from Special Forces. Those of you know that my husband is an ex-Special Forces guy. Slow is fast. Slow is smooth, and smooth is fast. So you get your rhythm, work your cycles, work on repeatability, consistency. Stop being impulse Ida or whatever, right? Just lock your fingers together if you find yourself over trading, and then back up and realize when you're over trading, you are moving using the back part of your brain, not the front part of your brain, right? And the front part of your brain is where all solid thought comes from. This part of your brain back here is all emotional, right? This part of your brain way back here, all of these are emotional, and this is analytical. So learn to grease those wheels up here and learn when you need to put those guardrails to keep you out of trouble. All right, everybody. Thank you so much. I'll see you soon. Take care.